What's up, everybody? Hope you're doing well. I watched a video the other day talking about the price of Bitcoin, whether or not it's going to go up or down, and there were a lot of statistical analyses done. And so I wanted to share those with you in case you were looking to get into Bitcoin now. I think there's some red flags, and so I'm going to share those with you. This is KISS Finance, going to keep it super simple. Let's get into it. All right, so I watched a video the other day from a guy named Gareth Soloway, and he's a statistic analytical type of investor. He looks at charts a lot in order to make his stock picks when to buy and sell. And, I'm sure a lot of people do this, but he bases, he puts a lot of emphasis on it when it comes to his stock trading picks. And what he was talking about in the video was how the price of Bitcoin has, over the past couple of years, made this huge M pattern. And he compared that to what Amazon did in the late 90s, early 2000s. And so this is the Amazon chart. And you can see down here, it started to spike up around September 15th, 1998. Kind of came down and then skyrocketed up, came down a little bit. And then you can see this double top right here at about $105. And it came back down, spiked back up, and then we went into the 2000 .com crash, and it came all the way back down, and it took between the high of basically it was December 1999 all the way until September 2001. So it took 9-10 months to bottom out. And then if you had bought up here, I'm just going to do a quick line. How long would it have taken you to get your money back? You gotta come all the way out here to 2009, okay? But if you are, this is kind of where we're looking at in terms of Bitcoin right now. So it's made this huge double top, right? It's come up a little bit, and you can see this is kind of exactly what Amazon did, which is really, really weird. But spiked up, came down, came up, and now we're kind of like, if you compare it exactly, and this is not, nothing's exact, but it's just eerily similar to how Amazon reacted right before the 2000 crash. And so we're like right here. So if you made a line here, how long would it have taken you if you had bought it in February 14th, 2000 at about 66 bucks? It would have crashed down to 6. And then it would have taken about 7 years in order to break even. And so what this guy was saying is that, there's a lot of reasons, and he's bullish on Bitcoin long-term. But if you look at the chart of Bitcoin, a lot of people, especially, Bitcoin, what they would call maximalists, they're just all in on Bitcoin. I made a video the other day talking about Max Kaiser. He's considered the godfather of Bitcoin. And, a lot of them are just always talking about how it's going to go to the moon. And, there's a lot of good reasons to invest in Bitcoin. A lot of people disagree. I'm bullish on Bitcoin personally in the long term, but I think this just makes sense. And, it's hard to argue with statistics and graphs and stuff like this. And so what he was saying in his video is that a lot of people look at this point right here and said, well, it came down right here, but then it spiked back up again. So what's to say that this isn't going to be the same thing? And what he was saying is that, again, his name is Gareth Soloway, and actually the link to that video, I'm just going to put it in the description. So if you want to go take a look at it, it's like a 30-minute interview, but he talks about this whole situation in like the first 5 minutes or so. So go check that out if you want. But he was talking about how after a big pump, you come down, and if you actually have like a dive down like this, like a short little dive down, that's actually bullish, like statistically speaking. You have about a 70 to 80% chance of going back up. But when the opposite happens and you have this type of move, it goes up slightly, that's actually a bearish move for, a stock or what have you. And so he was predicting, and this was like 2 or 3 days ago, he made the video, and usually videos come out like a day or two after. So he was predicting this right up around here, around like the 46, 47,000 mark. And now we're sitting down here at 43,200. So it's done exactly what he's thinking. And if he is correct, this is going to crash down. I mean, he was saying somewhere around between the 10 and 20,000 range. And, you know, so if you're looking to get into Bitcoin now, I bought Bitcoin, when was it? It was like, it was right here. Yeah, it was in, yeah, I think it came down to like 49, came back up. I bought like right around here. It was right around, I don't know, this time zone. And it just took a big old nosedive. And I think I bought around here because I bought like sometime in May. And so then it ended up coming up and I ended up selling. So I got in high, but then I waited for this to come back up. I didn't know what was going to happen. I was just hoping because I didn't want to lose a bunch of money, but I didn't panic sell. So I got out and I didn't ride it all the way up to here. But now I remember buying it like $50,000. And so now I would be underwater again. So if you're looking to get into Bitcoin, watch that video, take this into account. And when you compare it to how Amazon, you know, acted right before the .com crash, and a lot of people are talking about crashes. You know, I made a video the other day about the 2 and the 10-year yield inverting, and that's a very bearish sign for the stock market. So, you know, this can be very bearish for both Bitcoin in the, you know, short term. I'm talking about the next couple, you know, 3, 4, 5, 6, 7 years if you compare it to Amazon. But if you zoom out on Amazon, what does it do? Why is this not? What does it do? It goes all the way up to 4,000, right? From $6. So even if Bitcoin crashes down to 5,000, all these people saying, oh, it's going to go up to like, you know, 500,000, $1 million per coin. That's possible. But the last thing I will say is the reason he was comparing to the .com is because there were so many tech companies in, you know, the late 90s, early 2000s. Like everybody was putting money into these companies. And what happened was you just basically had way too many companies. Like it was, you know, it was just this huge bull run. Nobody wanted to miss out. And so every investor was like, hey, you know, you can, you know, take my money, go make a company, let's get rich. And then you ended up with like just way too many tech companies. And so what this did is just flushed out all the crap companies, and the ones that actually had value survived. And the very same thing could happen with Bitcoin. So there's 17,000 plus, you know, different cryptocurrencies right now. And what could happen if there's a huge crash, right? All these people who are thinking they're going to get rich on crypto are going to come to the realization that this is not what everybody thinks it is. Not every coin is going to be Dogecoin or, you know, Bitcoin. Not everything's going to the moon. And I feel like a lot of people are going to have a real hard reality check pretty soon. And when everything comes crashing down, it's going to wipe out the whole market. And then the cryptos that actually hold value, actually have something of value to provide to the market, are going to survive and they're going to thrive long term, just like Amazon did. So if you're looking to get into Bitcoin, take all this with a grain of salt. I'm not a financial advisor. This isn't financial advice, but it's hard to argue with statistics and graphs. And I'm just passing on what I heard from someone who's way smarter than me. So I hope this helps. Let me know if you have any questions. Until next time, see you later. Take care.